rest. Going to take a look at uranium again this week. So we've had a bit of a better week. I think those building blocks I've been looking for look a little bit more definitive this week. So good news, good news. And there was a little bit of good news. So let's just jump in and take a look at some of the news items that were floating around this week before we go in and look at some charts. So a couple of news items that were picked up by Uranium Charts on Twitter. I actually didn't ask him if I could reproduce this. I think he'll be okay with it. So we did have this. Putin instructed government to consider export restrictions on a number of goods, including uranium. So, well, titanium, nickel. So look, you can just have a bit of a read through that if you want. I don't know if it's massive news. It's certainly helpful. I guess if Russia's not exporting uranium, that's only adding to the shortage. But then again, I'd kind of just think, without actually having researched, well, how much uranium is the West buying off Russia? Anyway, nonetheless, it's certainly helpful if they're not selling as much to whoever. I don't know. But it's certainly, well, it's not bad for price, is it? Second one here, Larry Ellison from Oracle. Okay, so he sees an AI boom powered by nuclear energy. So once again, it's certainly helpful. I don't think it's not a smoking gun, and I think you've just got to be a bit careful too of what billionaires tell you, because they might be inclined to a little bit of personal book talk, and I wouldn't put it past Big Larry to have got himself a nice fat steak and something, and now he's just talking it up. Nonetheless, when talking heads like Larry talk, people listen. When he's talking about an AI boom powered by nuclear energy, it'll certainly prick up people's ears. And look, hey, it's once again, it's supportive for price. So look, thanks very much to Uranium Charts for putting those out. Certainly some interesting stuff there, and helpful, definitely helpful for us. No smoking gun. I think the only thing that's really, sadly, I think for uranium, the only thing that's completely definitive for price movement is well, Fukushima. That was definitive, right? It's only downside. So anyway, we just build these little bits of positive news. They all help, and that was what was out this week. So just looking at URA here, and yes, we're certainly climbing off the canvas, but we are still. I don't think. Yeah, we are still in a downtrend. There's just a little bit more that's got to be done before we can beat this, and this will be the same across everywhere. What's good is we held this low. Okay, it got close. It definitely got close, but we held it. And now, what do we need to do? We just need to come and break this. If we do that, then we've got that daily trend change that we're looking for. Okay, and we don't have it yet. That is for sure. It's a good start. Okay, but a lot of people might have been pointing to the seasonality of the stock. Okay, so yes, August tends to be a good month. Okay, and we did have this run through here, but what has traditionally happened in September is we've had a slackening off. Okay, we're just at that point now. The seasonality is not a guarantee; it is just a representation of the cumulative returns of previous years. So historically, we have seen a slackening of price through the back half of September and into October before we start to push up towards the end of the year. It kind of fits. I mean, I wouldn't mind seeing sort of. I mean, for holders, you probably don't want to see this, but it kind of fits to sort of come down here and test, and then start to push away up into the end of the year and start to capture this and get a bit higher. But listen to what I'm saying. The end of the year, okay, not the end of next week. Look, it could happen the end of next week for all I don't know. But that's just the way that I'm sort of reading how this is playing out at the moment. So, we've got this downtrend line, which is, it's betwixt and between, right? Because these downtrend lines they're subjective, okay? Because people can draw them. There's no particular way to draw them. But look, I think at this point, another marker I want to see is the RSI getting above 60. Okay, so if that can claim 60 and push up, I mean, that's going to be a good sign for continuing strength in the market. I think there is a little bit of work to do, itchy murky wise, to get above the cloud. Okay, and that flat top there is going to be. I would expect it to offer some resistance. Okay, but yeah, so this just represents the strength of the downtrend. We'll go over this a few times through the videos, but you know what I mean? Like this is kind of shaping up all right. just coming in here and looking at the 4 hours, what we're kind of seeing here now is, the shorter term moving averages on the stack are starting to once again challenging the longer term one. So, just this shorter term cloud is going yellow. We want it just above here, but ultimately we want this blue cloud to turn green, which means we want this scenario, okay, where everything's just tracking up, okay, and then what we want to do is come in and challenge this, which is the 50-day SMA, and this, of course, is the 200-day SMA. So, this was deeper than what I would have liked, but it is what it is. We just need, if we just get that even, that'll be cool. I mean, that's the start of a, you'd still say, okay, well, this is the start of the bigger trend, but within the next uptrend leg, you want uptrends going as well. So, we've got this, and we want that, but what we might just get in here is, this is how we might do it, okay, which is not a bad thing, to just step up slowly like that, okay, and just work our way higher. Straight rips aren't good. Straight rips tend to get reversed pretty quickly, okay? So that is what we're looking for. Let's just get rid of that. But the signs are good. There's just more work to do. So, that it's just, I would just be looking for this. I just, if it can hold this. But it doesn't, it's not necessarily dead if it doesn't, because it didn't hold it here, but we held the low. So I definitely don't want to see that. If it gets that low, so be it. There's probably some gaps in here that needs to get filled in anyway. So, but just coming back anywhere in here would be ideal. And then to break this top and then trend up again and take out this top, maybe you get something like that. And there's another retrace. That would be good. Okay, and then we start getting above all the MAs. Everything's getting dragged up the right way. That is what we're on the lookout for. Okay, so CCJ. Let's just look at a few things here. So there's a bit to go through here. Of course, the same thing. We're still looking for the trend change. So ever since here, we're talking about the building blocks. This retracement was deeper than what I wanted, but then this week has not been too bad. So look, I would look at this and think, okay, it was, well, if we can get above that peak like that, if we just can defeat this, so I'll probably just move this marker up to here because that's important. If we can defeat that, then we do have a trend change on the daily. Okay, and that's great. So there is still a fair way to go before we can achieve that, of course. There's definitely, there's a lot of work that's got to be done to break this. Okay, it's not going to happen straight away, I don't think. So, probably for me, what I would just like to see is from here, a retrace, and into the zone would be perfect. And then, of course, and this is on a smaller time frame, and then a rally that gets above that, because even there, on a smaller scale, we've got more trending activity than what we've had. Now, just looking at this on a, sort of more the way that the Red Devil would, sort of looking at the moving average stacks. So what we really want is for this cloud to go yellow, okay, and this cloud to go green. So to do that, of course, price is going to have to get through it. But you can see here this little area here, okay, that will need to just get through. So we've just got, might be a little bit hard to see, but we've just got a little area coming in here. Okay, so this is this represents the 20 and the 50 EMAs. Okay, and then we've got the 50-day simple moving average, and of course up here it's a little bit hard to see because, let me just clear that up for you. We've got the 200-day simple moving average. So they're all areas that we've got to beat and get above, but this remains pretty key just in the short term, just to solidify what's going on here. So something just to be aware of is we do have, and this was pointed out by the uranium charts through the week, that we do have this little bearish gap or bullish gap. Okay, so will that fill? I mean, I think that's the question. Will the market come all the way back down like that? So I've been through this before. Okay, 85% of all bullish gaps get filled. So that doesn't mean that it has to be filled, but the odds are that it's more likely that gets filled in than not. Okay, it's just a question of when. It could be a long time in the future. It could be next week. We'll have to wait and see. But even a retrace down here to fill that's not a bad thing, as long as we don't lose this. If we lose that, then everything's just kind of falling apart again. And what it just means is that the downtrend is yet to be broken. Okay. So we do also have some daily bearish gaps up here. So, you know, I mean, it's fair to say that these are the only two bearish gaps in the bear gaps in the market, okay, because obviously everything got filled in once we went through the all-time high. So these remain also areas that will have to get filled in at some stage. And it's quite interesting that gap just lies right on top of that structure that we were kind of looking at previously. And that, of course, that also lines up with the 50% retracement from the top to the bottom. So, that would certainly remain an area of tremendous interest for the market, I would suggest. But, so usually I wouldn't use these Ichimoku clouds, especially on short-term basis, but it's good when the market's trending. So we know that we've had a tremendous downtrend here, and the cloud is telling you that the market was always going to struggle to get through here because of the thickness of the cloud. But why we look a little bit better poised here, in my opinion, to potentially then get through, is that the cloud has thinned out. So all that means is that this price action has done enough now to dampen out the strength of the trend. Okay, so that's all we're looking at, timing and strength. But now that we've done this work, it's telling me is that it's probably been enough time now to break the back of this down move, okay? Because it was very, very powerful, which is why we ended up with a big thick cloud here, because when we plummeted, it pulls the shorter term moving average a lot further away from the longer term moving average, and that's what makes the cloud thick. So the thick cloud represents powerful downtrend, which is what we had. But now there's been a bit more time go through. We're just starting to digest it, and we look a little bit better poised to go above it. So we're not above it, of course. So, that's certainly a possibility. That can't be ruled out. And I think, that showed us this here, because at this point we were thinking the same thing. It's like, okay, well, we've got to start. But, and the only thing you can say, at least in CCJ, is we've held that low. Okay, some of the others we haven't. So we're not there yet. All right, so keep your expectations anchored around this, I think. There's, once again, when we were looking at this, that we were looking for a start. Okay, we didn't get it, so we just have to move on to the next point of call. Okay, and now we've got another start. Well, we just need this. Okay, that doesn't guarantee anything, of course, but that would be certainly very beneficial for the short-term direction of the market. I think that's probably pretty obvious to say. But if you look at this now on a daily, there is a lot of thick cloud that we've got to get through, and this could be a battle. So, that's why I've said before, the potential for us to go into a range here is there. We could start just doing this for a while before we can find our feet. Yet to be seen. But certainly that cloud is warning me that it's going to take some heavy work to get through that anytime soon. Okay, just looking at URNM. Okay, so this is what we hope to see, but that's not what we got, and that is a common thing in the markets. It's what you'd like to see, and then you just deal with what you actually get. So, this retracement did not hold, but importantly, we did actually see. So we've actually just clipped through that low. Okay, so that is actually still just a lower low, not by much, but it is. Okay, so you would actually just take the retrace off the bottom of that. Now, it doesn't really shift it dramatically, of course. I mean, you could almost argue that's a double bottom now. But one thing that's kind of promising here with URNM, at least, is that white line on the volume. That I use the 50 period moving average, and that's just starting to trickle up. It has been trickling up a little bit, but this week we've just had a few days where we've had some okay volume. Okay, so that's promising, and obviously it's been quite a good week. Interesting little candlesticks here, right? Because we've got basically the Marabuzu, the straight up, the Doji, okay, and then of course the come off on Friday. But you'll find that Fridays tend to be the weaker days for uranium. And that of course makes some sense because they're quite speculative. People may not want it over the weekend. If they've had a good week on, if the week's been good, then they might be looking to take a bit of profit, take a bit of risk off the table coming into Friday. Nonetheless, okay, so we've had the good buying here, a little bit of a lack of interest to finish out the week. So once again, this was never great. You can see here the structures, right? Because look at this. This is not very you know, I think I've said it before that this was not very conclusive. Okay, that's pretty undecided. This looks nice and strong. I like a lot, because of these candle, this one candle particularly, but it's more definitive to me. Okay, so it just looks to me like a better starting platform for a trend, and that is all we have, a starting platform. That does not mean that we're going to definitely trend higher from here. We're just looking for markers at this stage, okay, because we are still in a downtrend, and we're yet to beat that. Okay, so we're just looking for signs that the market might be starting to tell us that it wants to turn back up. This will be repeated a few times, but the power of the downtrend is represented by the thickness of the cloud and the duration of the cloud. Okay, so getting above the cloud is just a timing signal that we've done enough work to break the back of the downtrend. Okay, that's what that means. So there is water to go under the bridge. You can see how the top of that cloud lines up with the 50. That's why the overlay is so good, because it'll tend to pick out these areas without using your traditional tools. This is more just an Eastern style tool. So I think it's kind of nice. This is the Chiku span, the lagging span. Okay, now we got on the other side of the candles. Now all this is today's close plotted back 26 prices. So what this means is once this Chiku span starts getting above the candles, it just means that price is moving higher than where it has been in recent history. That's all that means. So it's just there's a lot of here that's it's a clever way of demonstrating where the market's at. So that's why we look for the Chiku span to get higher than the candles, because once it's on the other side of the candles, it just means that the market's moving beyond areas of recent price structure. Okay, so obviously we need to beat this. That goes without saying. So it's kind of interesting. We're just in here on now to come in and just compare the price structures. Okay, so when I compare sort of this and this, okay, so if I'm sitting here with an Elliott wave hat on, I can't make shit out of that. That's awful. This looks cleaner. Okay, this looks like it's got more potential to be like some sort of impulse. Okay, that's what an impulse looks like. It's a nice, relatively clean with a strong move in the middle. So if you're looking at this from an Elliott perspective, you go, okay, well, this is what we're looking for. We're looking for a move up, the counter move back, and then the move to keep going. That's all we're really looking for. That repeating pattern. Okay, so it's not predicting. It's just like we're looking for that pattern. We're looking for that pattern. That's effectively what we're looking for. Okay, as a continuation signal. So what we want to see here is some sort of three-wave move. That would be what we'd be on the lookout for. So I mean, we don't know if that's going to eventuate, of course, but if we saw that, we would think, okay, well now we're looking for a move. We're looking for this move to repeat, but just on a much larger scale. Okay, and that's why we go to the extension tools. All we're doing is looking for this same sort of shape pattern to repeat, but just on a bigger scale. Okay, that's it. We're not trying to predict, and we just know that and this is just from studies, that tends to be an area that the market gravitates to when it has an extension. So all you've got there is a trend. That's it. And then we would expect that, okay, before we get the next one. And then that, of course, would build as being a bigger trend. That's all it is. It's nothing more than that. It's not magic crowns. It's not prediction. It's not crystal ball stuff. It's just looking for repeating patterns. I digress. The point here is that this move certainly looks stronger than this move. Okay, it looks cleaner, but it's yet to prove. We're on an hourly. Okay, they easily do that. No question about it. It could just turn around and shit its pants. But we just hope for the best. Okay, we prepare for the worst, which would be that giving way. But look, now even just looking at this from that sort of EMA perspective that the Red Devil favours, and now we've got a green cloud, and all that means is that the 26 period EMA is travelling above the 50 period EMA. So we've just got the trend lines. The moving average is moving up. So what we're looking for now is this area to just try to support the market. Okay, so this would be slightly different, because if that was going to be the case and that's supported, well then I'm not going to get my retracement. I'm going to get a fresh push away like that, and that's entirely possible too. I mean, I don't know. Here's what the market can do next week. This is what I'll guarantee the market will do next week. It'll trade somewhere in this wedge. It'll trade somewhere in that arc. That's the only thing I can guarantee. It could trade through it. Okay, I won't guarantee it'll get on the other side, but here's what I'll guarantee: it'll be somewhere in here. It could be up here, could be I don't know. That's the only thing we do know. We know that it'll travel somewhere. That and it could travel nowhere. It could just be straight across. But other than that, there is no guarantees. So let's just see that if the EMAs can hold, if they can offer some support, if they can ride that, or if we're just going to get the little push back down, which would kind of tie into this. And that could be just a nice point to where old resistance becomes new support. So let's see. So I thought I'd just take a look at NXC because we haven't looked at any of the brand names for a while. We've just been focusing on the ETFs to give it an overall picture. But this has been kind of interesting. So we did retrace a little bit deeper than I would have liked. Okay, we speared through the 61.8, so that's not perfect. You go right back here, right, and we never made the 50. But that is coming off the COVID low, so that is a big retracement. Okay, that's a lot of price that we've gone through. Okay, and this is why we talk about the patterns, because you can see the three waves in there. All right, the wave, the correction, the wave, and now we've got another correction going on. So I won't go into the Elliott side of it this way, but we're just looking at market dynamics, because look at this, right? So this is the fixed range, this is the visible range volume profile. So this is just about covering the entire history of NXT. Okay, but what do we got here? This area is just is an area of low market acceptance. You can see it there. There's just not a lot of volume that's transpired through here. Okay, so we know that divot's there, but so I'm just going to expand that out, which is going to change that volume profile a little bit. Okay, but we know that there's not much there. But look what's happened here, right? So you got these tops where the market rejected. Now, we fell straight through here. The market rejected. The market rejected. We blew straight through it. The market supported, and now we've just tapped straight back into it in a big, and that's one that's one big ass ugly candle, right? Let's just look at this. Okay, so we probably don't need to relive the trauma of this. All right, we all saw it. But once again, this has got the building block. Okay, this looks better. Like, this looks more impulsive than some of the others. Okay, then we've got this quite sharp pullback. Of course, we just need that. Once we've got that, that's the start that we want the market to make. Okay, so I think the point here is, and it's the point for all of them, is that there's still a fair bit of work to do before the market can get up here. All right, so just keep your expectations on timing anchored. All right, this one has still got the trend lines like this come from swing structure. Okay, and so once we break that swing structure, and we'll do it properly when we get above that, okay, that's when you get the trend change. That's when you can delete that. But I keep highlighting this because we are still in a downtrend. There's just no two ways about that. We are trending down. We are not out of the woods here. These moving averages on a daily will all look the same. Okay, we've still got the 50 tracking well below. Sorry, we've still got the 26 tracking well below the 50. Okay, and as we've come through here, the shorter term moving average cloud has tried a few times to penetrate the longer term one. Can't do it. Okay, so getting above that would be good. But the only way that these moving averages, which of course are lagging, are going to get above each other and go into a more bullish posture like this, okay, because this is what we want to see, right? The only way that's going to happen is price needs to get probably above that and break the back of this, okay? So that is what we're looking for. So this white line is the 50 simple moving average, and this is the 200-day moving average, okay? So that remains a bit of an ultimate target. And quite interestingly, that 200-day moving average is currently sitting right in the middle of the recent retracement zone. And that, of course, is assuming that this low holds, all right? But so far, so good. So we would hope, of course, that this is the start of a new trend. That, we don't know what's going to happen here, but that's fine. I mean, that would be okay. That'd probably be the way I prefer to see it. The problem with straight line moves, and I wouldn't say this is a straight line move, is you tend to get straight lines back the other way. Okay, so that's why I'm saying if you get those steady building blocks, it's not a guarantee, but you're less likely to do that. Okay, even though that of course can happen. But the point here is that the steady building blocks up like that will probably mean you'll get more retracements that are a bit more sort of measured like that before you start getting the building blocks again, and then you can come back on the bigger picture and go, okay, oh, I've got this, okay, and that's what I'm looking for. So really, this is just a slightly different, well, it's a slightly different interpretation of the same idea, is that we just want to get a pivot that's higher, okay? So if we get the higher pivot, first order pivot here, and then the market can swing like that, the candles will go green, which means that we're starting to move higher than our current pivots, okay? So what we need, what will happen is, as if this moves back down, we just need another bar or two. This will become a pivot like this. These dots represent the first order pivots, and then as long as the market can come down, hold, make another lower pivot like this one, okay, because that's a first order pivot as well. And then if we just move up, then the candle will start going green, representing that we're starting to go into a uptrend in terms of the structure of the price. A little bit to go yet, all right, but it's like I said, it's solid building blocks, I think, off what's been a pretty painful rip down. All right. So let's just see how this transpires. But this looks okay. It looks okay. I'd also just keep an eye on this RSI, okay? Because the 60 level, you can sort of see. I mean, this is sort of 62. Maybe you could take it like that, but it's not. It's not an absolute definitive line in the sand. But if you just say this 60 area in the RSI, you can see what's happened through here, right? Once we started failing, we're just in a downtrend, okay? And then any bounce, we need it to get above that, all right, to start to establish a more bullish way that the RSI is moving, which just means that the up candles are outpowering the down candles overall, okay, and we don't really have that, all right. So that's where we see it. They're the markers that I'm looking for. We'll see what transpires next week, but we got a good start. I think that's the takeaway for today's video. So thank you very much for watching, and we'll see you next week. Bye for now.